So here we go. We're gonna start on lesson one. Can you guys see my screen? Okay.
Yes.
So stock and option. Let's start there. Okay. Stock and options. One, good stocks get dividends quarterly. Two, they're sold in shares, which are pieces of the company. And three, can anybody help me out? I'm drawing a blank. Dividends sold in shares. Does anybody know the third one? Really? All right.
Is it because you can pass it on, like transfer it?
Yes, Lord. Thank you. Thank you, thank you, thank you. It's an asset that you can keep, sign over, or will to someone. Thank you so much. For stock options, which is this here, stock options are also called derivatives. I'm going to try to spell it. Deriv. Help me. Derivatives. DER. IR. Deriv. DERIVATIVES. Derivatives. Okay. Derivatives. So what this means is that with stock, you own it. Since it's a derivative, you control multiple shares, but only a tiny bit of that share or the derivative of it. So with stock options, you don't own it. You don't get dividends. Space. And it's sold in contracts. A lot of students have problems with this. It's sold in contracts. And what it means is this. Let's look to the right here. So you can see that Apple is 119.04 on my watch list right here. Okay, so 119.04. That's how much it costs if I buy it, own. Okay, since we're talking derivatives, let's say 119.04, rent. Okay, so if I own it, one benefit of owning it for 119.04 is that I get Apple's dividend is about 50 cents, I think. 50 cents every quarter. Okay, another point is you own it forever. And the last one, it's an asset. No, that's own it forever. You own a share. It's basically a share. Okay? When you rent it, here's the thing. You only control it a certain amount of time. You only control it for a certain amount of time, 100 shares. Okay? So for 119, I can rent it and control 100 shares. Or if I own it, I get the 50-cent dividend, and that's basically it. The reason this is important is because if it goes to 120.04, if it goes up 120.04, I only profit $1. If the same thing happens here, if it goes up $1 to 120.04, I will profit $40. So that's the thing with derivatives. You're renting it and controlling 100 pieces of it, so you can realize the bigger gain with the $1 move. When you own it, you only make $1, but you have the peace of mind of having it forever as an asset. The main difference between stock and options, there it is. Number 2, risk. 2 types of risk. Okay. First one is defined risk. Second, undefined. All right. Defined risk is synonymous with stock options. Undefined risk is synonymous with stock. Okay? If I input $100 into the stock options market, I can tell computer that I'm only willing to, this looks crazy, lose $15. Okay, so with defined risk, I input 100. I tell the computer that I'm only willing to lose $15. If it happens, I'll get my $85 back. Okay. Once again, feel free to ask questions, but I input 100. I'll tell the computer I'm only willing to lose 15. If it happens, I'll get my 85 back. Okay. With stock, you can do the same thing. With stock, you can do the same thing. But what makes stock undefined risk is this point right here. Can't protect dividends. You cannot protect your dividends with stock. If something happens with the company, you're not going to receive that check that you were expecting every 3 months, depending on the company. Okay. So that's that. There's risk. Now let's talk about 2 types. That's number 3. So when you purchase stock options, there are basically 2 types of contracts that you'll ultimately be purchasing, A and B. A is called a call contract, B is called a put contract. With a call, make money when the stock price increases. With a put, make money when the stock price decreases. So with the call, the way I remember this is call up, put down. Okay, can you guys still hear me? Testing 1, 2, just to make sure you can still hear me.
Yes.
Okay, thank you guys. So call up, put down. When you purchase a call, if the stock price increases after you purchase it, your contract increases in value and you can sell it or continue to hold it. With a put contract, you want to put the stock down. So if the price of the contract does go in fact down, your contract increases in value and you can sell it back to the exchange for the higher price. That's a put contract. Now, let's talk about first down. I often call it first down because I explained it in football terms, of course, but it's actually called the strike price. Okay, the definition. The price you think the stock will be in the future, or the price that you think the stock will move toward. All right, here's what the strike price means. The price you think the stock will be in the future, or the price that you think the stock will move toward. Okay, if this was in the dictionary, this should be a noun, I think. So I always explain this in football terms. So let's look at a football field. Okay. Okay. This is fine. Let me just.
I don't know football.
It's okay. I'm gonna explain it right now, and I'm gonna draw on it so it's pretty for you.
Okay, okay.
Okay. So let me come here. Okay. Let's write on this thing. So this is a football field. Well, I realize people have smaller screens, so let me make it like this. Clear. This is a football field. This would be the 51-yard line. Well, I'm sorry, guys. Let me make it somewhere you can see it better. The 51-yard line would be here. The 49-yard line. And I did play football, defensive tackle. I wasn't smart enough to be able to pull as an offensive lineman. So if we're standing here, okay, if we go this way, that's a call because that's above 50. If we go this way, that's a put because it's below 50. Okay? So let me erase this. So I often ask everybody, if we're standing at the 50 and you think the stock price will increase from 50, what type of contract would you buy? And all you have to do is reference this. Oh, I removed it, I'm sorry. A call contract. You think it's going to go up. So what you do is this 51 would be a 51 strike call, and it has a price. We're going to talk about prices as we progress through this seminar. So this 51 strike call contract has a price. So does this 49. Okay? The further you go away in each direction, the cheaper the contract. Okay? So if I wanted to do the 65, that would be somewhere over here. The 35 would be somewhere here. So these contracts cost less because they are far further away from where we are now, which is the 50. That's the whole notion behind strike price. The further your strike is away from where you are, the cheaper it is. The closer, the more expensive. Okay? So let's delete all this. That's why I call it the first down. So let's get past that. Expiration date. Expiration date is pretty simple. I can show you guys this right here. Of course, you know I love Apple. So when I talk expiration dates, just look where I am. When you log in, I am in the trade tab. Okay. These dates to the left are all on a Friday. I don't care what calendar you use, the Mayan calendar or the Gregorian calendar, all these dates are on a Friday. Does somebody have a question? All right, so let me make sure. Okay. I'm sorry, guys. I just hit somebody's mic. Okay. So in this box, that's the day. This box represents how many days until it expires. So this is how long your investment has to move in your direction. Okay, 5 days, 12 days, 19, 26, 47. Each of these have different prices, okay? So let's go back to where we were. That's expiration dates. So in case you missed it, Expiration is this here. How many days until it expires on these corresponding Fridays? One thing I also like to point out is if you're feeling risky and you want to try to make a lot of money really quickly and you're using stop limits, these contracts are the risky ones because you only have 5 to 12 days for something to happen. Okay? From 19 to about 33 is a safe zone, 2-3 weeks. Okay? From 40 to 90, that's more of a long-term investment. So if you have a 401k and you want to manage it yourself, but you also want to stay in tune and not look at it too much, you play around in that. And of course, you can go further down. So that just lets you know, risky, high risk, high reward. These are cheap, but if it moves your way, you'll be okay. This is medium, okay? Sometimes I get my burger medium well, but most of the times I like it well done. So this is well done, long term. LT, long term. Risky, medium, this is well done or long term. Okay? So let's clear that away. Going back here, we now can talk about in the money versus out of the money. Let me explain. I tell everyone what this means, but let me illustrate it. Can I clear? Why is everything? Okay. Here's what it means. I'm going to open an expiration date. Okay. I need to stretch these columns. I'm sorry, guys. I have to make this. Well, I don't really. I can minimize this. Okay, here we go. So the stock price of Apple right now is $119.04. This is the price of Apple. These are my calls. If I think Apple is going to go up beyond 119.04, I'd be in this section. However, if I feel like a contrarian or I think it's going to go down, I'm going to buy puts. Contrarian is just doing the opposite. Everybody's been buying calls. These are the strikes shown. So if you count, these are 14 strikes. I can increase it to max 2, 4, 6, 8, whatever amount you like. One thing that helps a lot of students is that these are in blue. And when it's blue, it means that it's in the money. In the money. When it's in black, like here, it means it's out of the money. Out of the money. So let's do an example. Let me get my spotlight. 119 on the call side is blue. When I say 119 is blue, I mean if you look at 119 for the calls and you travel to the left, you'll see nothing but blue. 119 is blue because for 119 to be in the money, the stock price has to go past 119 by 1 penny. Since 119.04 is greater than 119.01, this is blue, meaning in the money. 120 is not in the money. For 120 to be blue and not black, the stock price has to go to 120.01. If the stock price goes to 120.01, this will turn blue. Okay? The same example on the put side. 120 on the put side is blue. It's in the money. Here's why it's in the money. The stock price has to be 1 penny below this to be blue. 1 penny below 120 is 119.99. This is less than 119.99 or that number exactly. Okay? So this has to be 119.99 or lower, and that's why it's blue. 119 on the put side is almost in the money. Okay, if this thing drops 5 more pennies to 118.99, this 119 will become blue and will be considered in the money. So that's all I wanted to say to you guys. As far as pricing goes, this one in the money is $141. Okay, it's not a candy bar. It's not $1.41. It's 100 shares in each options contract. 100 times $1.41, it's $141. Okay. If I want to get the 20, 93, 21, $59, 37, 22, 14, 9, 7. So the further you are away from it, the cheaper it is. The deeper you go in the money, or the more the stock price passes you, the more expensive it is. So if you buy it here at $7 a contract and you sell it at $445, you know, you're going to be really happy when you cash out. So let me clear this. Let me get back to where we were. In the money versus out of the money. Lesson 1 is complete. Does anybody have any questions before I leave lesson 1 and start 2? All right. So, lesson 2, your sentiment. What kind of animal are you? Let's go back to the internet. Let's go to Google. All right, let me type in Wall Street Bear, my man. Here he is, view image. This is the Wall Street Bear, okay? Bears buy puts. So let's get this on paper and keep the bear in the background, just so you guys have it visually and written. So let me go here. Bear. So anytime you hear the term bear, bearish, bear markets, that means you're going to buy puts, or you're going to probably buy puts, or you most likely will buy puts. Okay? When you buy puts, it drives the stock price down. So when we come to the chart, and let's look at the day, let me just zoom over. So look at this candlestick right here. This candlestick right here, bearish candlestick. This is a bearish candlestick. Let me show you why. It's red because the price decreased, okay? So the price started here, S-T-A-R-T. The price started there and it ended here, E-N-D, here. So it starts at the top, then it drops at the bottom. So it opens here and closes here. This is in 1 minute. So in this 1 minute, the stock price went from 119.15 and it ended at 119.10. In 1 minute, it did that. Okay? So let me erase that. For the green candlestick, this is a bullish candlestick. Okay? It's the opposite. With a bullish candlestick, it starts here, because when you buy calls, you drive the price up. It starts here and it ends here. Okay? So for this minute, it went back to about 119.11 and it ended at about 115. Okay? Starts at the bottom, pops up, ends. Starts at the top, drops, ends. So that's the difference between a bullish and a bearish candlestick. Okay? They have something called candlestick patterns. When you start to recognize the patterns, you can really take advantage of trends. And I'll talk about that towards the end. I'm an hour in, right? No, I'm a half an hour in. So we're making good time. So let's go back. What kind of animal are you? Where's my bear friend? There he is. The other one is a bull. So let's show this guy. Okay, boom, boom. There he is. So with him, bull, bullish, bull markets. Welcome. You didn't miss too much. We're half an hour in, but don't worry. We're going to send the video after. So bulls buy calls. If you're bullish, you're buying calls. And if it's a bull market, most people are buying calls. Okay? So you can be a bull or a bear. So that should cover it for this one. What kind of animal are you? Difference in percentage. Okay, this is really important because the difference in percentage is also called ROI, or return on investment. Here's how this works. I often have you guys write the formula for it first. A, B, C, new minus old. Okay. Then you want to type divided by old. Then you want to do multiply by 100. Okay. Example 1. I always use this example because it's so easy. Phone bill, month 1. Your phone bill in month 1 was 60. Your phone bill in month 2 was 68. Okay? That equals $8 increase. CREASE on phone bill. Okay? So we started with $60 phone bill. It went up to 68. That's an $8 increase. It's polite when you're talking about money with people to tell them how much of an increase it went up. You don't tell them your phone bill is $60, okay? You tell them that your phone bill increased 8% or 10%. Okay, let me see. So here's how we figure it out. Here's my trusty dusty calculator. If you work this formula out, 60 is the old amount because that's what we started with. 68 is the new amount because that's what we ended up with. So if you work the formula out, new minus old, that'll be 68 minus old, which is 60. You'll get 8. That's the increase. Okay? Now we have to take 8 and divide it by old. So 8 divided by old, 60, equals 0.13, a bunch of 3s. So you multiply that by 100 to get the percentage out. 13.33%. That's the increase. 13.33%. I guess you can put 3333%. That's the increase. So what we're saying here is if your phone bill in month 1 was 60 and it went up to 68, that's a 13.33% increase. Okay, welcome guys. You didn't miss too much. I've only been up here for about 30 minutes. I'm definitely going to send the replay out. We're on lesson 2 right now. We're talking about the difference in percentage, or ROI. From 60 to 68 is a 13.33% increase. Here's how you figure out the math. You take your old amount, 60, and you multiply it by 13.33. You have to do it in decimal point, in decimal form. So 60 multiplied by 0.133333, you get 7.9999. And if you round that, plus 0.01, you get 8. Okay, if you round it, you get 8. That's the increase. That's how you check your work. That's that. I have you cross this out. People ask why I cross this out. The boxes, this is a box, this is a box, this is a box. Account info, news, and watch list. When I come here, you'll see the same thing. Account info, news, watch list. Monitor is in this trade tab. So let me go on demand. Okay. Okay. So monitor, this is Target. Since I own Target, it's right here under the monitor tab. Okay. Trade, when you actually place a trade, will be on this tab, looking at the option chains. Okay. Analyze, when you click a trade, once you click a trade and you hit the price, so let me leave demand. Let me leave on demand. Sorry guys, on demand is not seeming to want to work. Let me see. Okay. It's not. I'll get off demand. Okay, so analyze. If I wanted to purchase this contract for $93, all I have to do is right click on link and hit analyze trade. Okay, once it comes to analyze, just make sure you select risk profile. This is the risk profile of my trade. Okay, all this means, you click and hold to drag. The stock price of Apple right now is, we got to close this up a little bit. Okay, the price of Apple right now is $119.04. $119.04 is right here roughly, okay? $119.04 is right here. If the stock price goes up, that $93 investment, if it goes up to 120, I would make $44 from this $99 investment. I would make a $44.28 profit if the stock price only goes up $1. That's why people trade stock options, because from 93, I can make 44 if the stock price goes up by $1. If it goes up $5, 93 can turn into a $429 investment. So this is the Analyze tab. Okay. I have to make it small. Please forgive me if it's too small on your screen, but I can't keep resizing this and dragging it back. It's a pain. So let me make it smaller. Okay. Okay, that's a little bit better for me. All right. And when you're done analyzing, you can add more trades down here. But to delete it, you right click, delete, it's gone. That's the Analyze tab. The Charts tab is this tab. We're gonna go through each, so don't worry, but that's what all the tabs mean and where they are. Does anybody have any questions about 1 and 2? Because I'm about to go into moving average now. Okay, moving average. Let's go to stockcharts.com. When you get to stockcharts.com, I'll zoom in for you guys. Once you get to stockcharts.com, you type the company symbol, AAPL, enter. Okay. I'm going to take my time going over this. Moving average. The moving average is just a trend line. It's a part of an analysis that will help you try to predict the trend or the direction. Okay, so let's start with this. Let me zoom in for you guys. Come on, Apple. Get me closer. Get me closer. Okay. Are you moving average? This says MA 50. MA means moving average. 50 is the number of days it represents in the moving average. So over a 50-day trend, the price has been increasing. Okay, so 50 days, in the last 50 days, the stock has been performing relatively well. For the longer term trend, the 200-day moving average, it was doing poorly at first, coming down, and then it started to go up with the short-term trend. Okay, so you can see how the short-term trend affects the long-term trend. So to just be a little bit clearer, because this was doing so well in the short term, you actually could see in this area the long-term trend start to reverse. It went from negative in here to positive before it came out. Okay, that's all the moving average tells you. If you look to the right, you'll see this is the current stock price, 119.04. There it is, 119.04, Apple. This is the short-term average. So short-term, the stock price should be at least here. Long-term, it should be at least here. Since it's above both of these, this is a bullish run. It's outperforming the short and the long-term trend. That's a bullish run, guys. Doesn't mean to buy it, doesn't mean to sell it. It's just letting you know what state it's in at this moment in time. However, if this was down here, it would be in bearish territory. So if the stock price was below these two numbers, it'll be bearish territory. Now, since we understand moving average, let's talk about what these mean. This is a bullish candlestick. When the bulls win or they buy calls, the stock price increases and it goes up. It starts here and it ends here. Okay? When it's red, the price went down. It starts here and then it drops and ends here. Okay? So this is a bullish candlestick. This is a bearish. When you see the black, it just means it was hovering in the same range. It was range bound. That's what a lot of people call it. Okay? Now let's talk about Bollinger bands. Bollinger bands. Update. So just to make sure we're on the same page, I'm going to outline these. This is the dotted line in the middle of the street. This is the top of the street. This is the bottom of the street. Okay? Some guy named John Bollinger decided to take the mean. This is the mean. I'm sorry, this is the standard deviation, okay? This dotted line is the standard deviation. If you add 1 to the standard deviation, you'll get this top green line. If you subtract 1 from the standard deviation, you'll get this bottom green line. Okay? Here's what this means. You see how this red candlestick is popping outside the bottom of the street? Here's the bottom of the street. And the red one is violating that street. This is a signal that it's overbought. I'm sorry, oversold. When it sticks out of the bottom, it means it's oversold. Oversold means too many people sold the stock and it's about ripe for a rebound. So as soon as it stuck out like that, look what happened. Let me clear this out. Good evening. You didn't miss too much. We're about 45 minutes in. Feel free to ask questions, but right now we're currently on lesson 2, moving average, ready to go into lesson 3. Okay. When something is oversold, it's ripe for a rebound. So I just wanted to show you guys that. You see, once it dipped below right here, it popped back up to here. Okay. So it went from 106 to 113. If you caught that move with $100, let me see. Okay. Thank you. So if you caught that move from 106 to 113, with $100, you could have made about $400 or $500. If you caught the move from here to here. So you would have bought it right here because it was hanging below. It was oversold, a signal to buy, and it popped back up. On the other side, if it pops above the top one, like it did here, you see how it stuck above it? It means it's overbought. Too many people bought it, and you saw it come back down to here. So it went from about 116 to about 113. It fell down $3 once it hit that top line. So just to make sure, this is the top line. If it comes above it, it means it may go down soon. This is the bottom line. If it pokes outside the bottom line, it means it may pop back up soon. And you saw it pop from here to here. Okay?
So stop, Finesse, excuse me one moment.
Yes, sir.
Those are indicators whether or not to buy or sell, correct?
It's one of them, yes, sir. It can be one of your indicators. Yes, sir. It's definitely a signal for me. If it sticks above the line and I'm seeing good news and I see the volume starting to right here, that's a good signal for me. So news plus the volume plus it sticking out, I would buy it and see it pop up here. That's just my opinion, though. Okay. So now, since we talked about Bollinger Bands and moving average, good question, by the way. It is a signal. Mouse. Spaceship. Let's talk about spaceship. Account info. Okay, here's an account I really don't touch. Let me open it up. Okay, account info. If I wanted to buy stocks right now out of this account, I only got $19.73 to do it. My account is worth $59.73. This is my account value. Okay, so of the 59, I have 1973 that I can spend. So it's perfect to suggest that there's $30 tied up in stock. $40. So now that's the account info. Let's talk about news. Here's the news. When you see these white signals, it means that it's a video. So all you do is click it and then it'll play a video. If it's non-graphic related, it's just an article that you read. Okay? So this keeps you up to date on whatever your stocks are showing. Next, watch list. Some people ask me how to add things to their watch list. I'll get my spotlight and show you. I'm going to close live news so I have more space. I can't see the bottom, so I'll extend it. Okay. You see this blank space down here? All you have to do is click there, type in a symbol. Press enter, and it's on your watch list. If you click it, you'll be able to see the chart, okay? So on the watch list, let's review what everything means. This is the symbol. This is an earnings call. If you go to the chart, or if you hover over this, it'll tell you when the earnings call is. Apple's earnings call is January 31st after Market Central Standard Time. So this is going to come out after the bell rings 4 o'clock on that Friday. I think the 31st is a Friday, maybe a Monday. Okay. The last, or maybe in the middle of a week, this is the last price of the stock before the price changed. This is the last price of the stock when the market closed. So 1904, you see Apple over here is 1904. Net change. Net change is how much the stock went up or down since the last day's close. So since it says minus 2.1, Apple lost 21 cents on Friday, the last day it was open, compared to the Thursday prior. So the day before that, Apple closed at 119 plus 21 cents. Okay, 119.25. And then today it closed at 119.04. So it lost 21 cents since the day before. Bid. Let me circle that. If I wanted to sell it, I would have to look for bids. So the bid price is how much I could sell it for. I could sell Apple stock right now for $118.90 if I owned it. Ask is how much it costs if you want to buy it. You have to ask the price. If I want to buy 1 share of Apple, it's going to cost $119.02. But since the market closed, this is the more accurate price. Okay? This is the more accurate price, the last. The ask is accurate when the market is open. The last is accurate when the market's closed. Clear? Monitor. Let's go to the monitor tab. Monitor. Some of you guys don't have this set up the way I have it set up, so I'm going to take the time and show you guys how to set it up. When you come to the monitor tab on your own platform, whether you're in paper money or looking to go on demand within live trading, good evening, you didn't miss too much. Just watch us and you'll get the replay. Miss Camula, you didn't miss too much at all. I can't mute you, which is crazy. All right. Anyway, here's how you set it up. Once you hit the monitor tab, you hit the gear button. I'm going to hold it right here for about 6 seconds. You want to make sure it says net liquid, trade price, mark or market price, quantity, how many contracts you own, days, how many days until it expires. To remove it, you double click. To add it, you double click from this side. After you add your columns, you have to hit OK, and you'll see it here. So now let's talk about everything. I am going to open a contract, Bristol Myers. Okay. Let's talk about this contract. The first line, you see how it's black and it says Bristol Myers? This is how much the stock price is, 56.22. The reason it's a third decimal is because it could be traded in half cents. So if that 0 was a 5, the current stock price would read $56.22.5. The second line is the contract. That's this one. This expires on the 20th day of the month of January, the year 2017. So this expires pretty soon. I thought the price was going to go towards or to 72.5, and it's a call. Okay. This is illustrative of something very important, guys. I'm glad I have this here. The stock price is 56.22. January 20th is in how many days? Sorry, guys. It's got to be pretty soon. 5 days. So this is funny. This is what happens when you hold a contract too long. The stock price is at 56.22. It has to go near or towards 72.5. It's no way this thing is going to go up $20 in 5 days. That's why it's only worth $2, and I lost $66.50 since I bought it. So this thing has steadily been going down. This is what happens when you don't watch your stocks or you don't have stop limits. You just constantly lose money over a long period of time. I purchased this probably 7-8 months ago and just let it sit. Okay, that's that. So let me go over each of the columns. Net liquid. If I wanted to drink the liquid, this is how much I can sell it for and get right now. This is only worth $2.50. Trade price, the price I paid to trade. When I first purchased this, I paid $69. 69 cents times 100 is $69. The mark price is what it's going for currently on the market. Okay? Is $2.50. That's why it's $2.50 here, because it's on the market worth $2.50. I have one contract. One contract times $2.50 equals $2.50. 5 days until this thing expires. Okay? 5 days until it expires. Quantity, one contract. PL open. PL open. If it's in parentheses, it means you lost money. If it's not in parentheses, it means you made money. PL open is since you purchased it. PL day is just for that particular day. Since it's Sunday and the market's closed, everything is rightfully zero. Okay? So this is the monitor tab. Good evening. You're not missing too much. We're just going over every lesson. I'll show you the replay if you missed anything. Let me just make sure your mic is muted. Yep. Okay. We did monitor. Now let's do trade. Let's do trade. Okay. If I think the stock price is going to go up from 119.04, I'm going to be on the call side. If I think it's going to go down, I'm going to be on the put side. Okay. Sorry about that, guys. If I think the stock price is going to go up, I buy the calls. If I think it's going to go down, I buy the puts. These are my strike prices. It's very important you guys understand these strike prices apply to this side and they apply to this side. Just depends where you're looking. It's like a fence. Depends what side you're looking over. If I think the stock price is going to go up from 119.04, I'm going to purchase the out of the money call. The reason I'm going out of the money, that's why it's black, is because it's $93. If I wanted to spend a little bit more than $93 for protection, I would purchase the in the money call. This is more expensive than the $93 because it passed 119 by 4 cents. That 4 cents makes it $20 cheaper. I'm sorry, $40 cheaper, really. Okay. That's how the option is priced at that point in time. So let me clear that. If I wanted to buy it, all you have to do to buy something is look under the ask column. Anytime you buy calls or puts, you have to look under the ask column. You're asking to buy it. If I want to buy, I hit that. If I wanted to buy it now, confirm and send, send. Since I just want to analyze, I'm going to look at the link. You see how it says link? I'll close this. You see how it says link? You right click on it, analyze. Okay. You see it at the bottom in green here. The trade. It's 119.04, which is here. If it goes up to 120, you see in the purple, I would make 43.27. If it goes down to 117, I would have lost $52 of the 93. Okay? So this kind of lets you know how much you can make or lose. Your analyze tool. That's trade and analyze. Some people ask me, what if I buy a call and what if I buy a put? To close it, I hit the arrow. If you want to buy a put as well, you click one on the ask column. You right click on link. You analyze this trade. Now you see my call and my put are down here. So if I extend this a little bit and move this to the side, you guys can see my call and my put down here. You guys see how it's more lines now? Here's the current stock price, 119.04. If it goes up to 120, I'll lose $2. So if it goes up, I'll lose because my put is heavier than my call. That's why when it's going up, I'm losing. But at some point, look what happens. The more it goes up, the more I make. With a put, it goes the opposite direction or down. The more it goes down, the more I make. So that's how you straddle. And when you purchase two at the same time, you can kind of ride the trend and let go of one once you see it stretch too far in that direction. Okay? So if you're moving to the positive side, you're going to want to eventually sell your put so you can make more money. If the stock is going down, you're going to eventually want to sell your call so your put can make more money. So that's how you analyze. Okay, welcome. You missed about an hour now. It's okay though, because I'm going to send you the replay. Have no fear. Bruce Leroy is here. All right, so now let's talk about charts. Yes, one of my favorite lessons is coming up before. Okay, sorry about that. Okay, so let's talk about charts. I'm going to take my time because a lot of students have trouble here. It's a lot to grasp. So I'm going to first start by closing this thing. Okay, now let's talk about where we are. This is the charts tab, guys. Hold on, guys. I'm going to pause and put my charger in. I'm on 33%. Where's my charger? Okay. There we are. So I am on the charts tab. Here's everything that's important about the charts tab. The current date, the volume, the zoom button, the scroll bar down here. This is my context button. These are my drawings. Okay. And what am I forgetting? The volume is down here. These faint blue lines depict volume. Okay. First thing I'm going to do, this button here is the context button. When I click it, I see my different contexts. 20 years, 3 years, 1 year, 180 day. So this represents how big the graph is, and behind the decimal or the colon, it's going to show you how big the candlestick represents. So each candlestick in this chart will represent 30 minutes. Each candlestick in this chart will represent 1 day. Each candlestick in this chart will represent 1 entire week. Okay? When you're on charts, when you click drawings, trend line is what I like to use to draw trends from here to here or from here to here. That's how you draw trends. Okay? Remove all drawings, yes. You also have price level. That's when you double click to note the prices. You just double click, okay? I like to use text note. You just click where you want to leave the note. Purchased puts here. Okay, it'll leave a little note for you there. Then you have your Fibonacci retracements. So you click once on the bottom, click once on the top, you'll see your Fibonacci. So those are the tools on the charts, okay? So bear with me. Okay. Hey, Mr. Kyle. So that's that. So we covered the charts tab. So let me clear everything off. So in the last hour and 8 minutes, we covered lesson 1. We covered lesson 2. And we just now covered lesson 3. Now we're going to go into lesson 4. We're going to start with support and resistance, volume, what's going on in the world, reading the chains, and purchasing. Okay? I just showed you the chart and analysis tabs and tools. I showed you the context button, which is here. And now I'm going to show you support and resistance. A lot of people have questions about support and resistance because it's very difficult to understand. So I'm going to take my time right here. First thing I want to do is look at the 20-year by the day. That's the 20-year by the day. Okay. Anytime you're in a specific context, this computer will tell you the high and the low point. So the highest Apple stock ever was in 20 years, adjusted for stock splits, was $134.54. If you look at the date box, which is here, right here, the date this happened was April 24th, 2015. The lowest the price ever was 46 cents. Okay. Once you decide that, you look at the 180 day. The highest Apple stock has been in 180 days is $121.84. Okay. The lowest it's been is $89, the summertime. Look right here. This is the volume. Anytime I move my mouse, it's going to show me the volume. And since you don't see a scroll bar, it means that everything is right here on this one screen. So if you can't scroll, don't panic. It just means you already can see it all. Okay. Now we're going to go to the 10-day. This is where I'm gonna draw support and resistance. This is the 10-day chart for Apple. This is how I do it. You can't, this is how you do it, Montel Jordan voice. So what you're gonna do, since you can't draw this red line with me, you have to imagine it. So this is where we were today. Imagine that. This is where we were yesterday. The day before we were here. The day before we were here. So on and so forth. So I'm just gonna circle each day we were at in 10 days. Okay? So do you see how these lines show a trend? Okay? All I did was circle each day. Once you do that, you hit drawings and you hit price level. Right here, I'm gonna double click because none of the circles fall below that point. Right here, I'm gonna double click. None of the circles go above that point. So when I clear it, I'm left with support and resistance. That's how I draw it. I'm gonna do another one after this. Once you draw support and resistance, you hit drawings. You go to Fibonacci retracements. You click once on the bottom line, in the middle towards, boom, let go. Go to the top line, click once, boom, let go. This is what this line means. When you zoom in, I'll get my spotlight. When you zoom in, okay? All this means is that if the stock can't break above 119.05, it's gonna head back towards 118.37. It's gonna break this support line and head back down here. If it breaks this support line, it'll fall towards 117.83. So these are mini marks between your support and resistance. It just shows you the range of the stock and what may happen if it breaks the preceding or the next line. Okay? That's all this means. Let me do another one. Remove all drawings. Let's go to target. Okay, let's do this one. This is where we are right now. The day before, the day before, the day before, and that one, and that one, and that one, and that one. After you draw your imaginary red lines, you guys see the trend. It's been sloping down. Okay. Once you have your imaginary lines, you take your drawings, price level, you got your support here, you got your resistance about here. And notice this. This circle is above the line, but it's the only one. Okay. You got to split the difference. So most of the circles are snugly below it except this one. So you can kind of count this one out because it doesn't fit. And it was 1, 2, 3, 4, 5, 6, 8 days ago. So it's safe to say your support and resistance is here. So when you clear it away, there it is. Mouse. You hit drawings, Fibonacci retracements. You click once on the bottom line, let go. Go to the top line, click once, let go. This is a good example, guys. Let me show you why. Let me clear a mic. Let me see. Okay. Hey, Miss Talisha. So this is why this is a perfect example. You guys see my support right here. This is my support line, the thick black red one, or the thick red one. This thick red one at the top is my resistance. Okay. If it falls below this line, it's gonna break support and it's gonna really fall hard. It's called a falling knife. No one knows how much it'll fall. Okay, if it bounces off this line, this is called true support and it'll probably head this way and start to break these lines. Okay, support, resistance, Fibonacci. Here's how I determine if I'm gonna be bullish or bearish, mostly. besides the other trends I use, which I'll show you. I'm bearish because I think across the 10 days, it's going to break the support line, which is right here. I think it's going to break this line and head downwards. So I'm bearish. Just to make sure I'm bearish, I'm going to zoom back out to the 180-day chart. Okay, zoom in a little bit. So now, let me clear this out. Remove all drawings. You see where my support was, guys? Price level, my support was right here. The last time the stock price was right here, look at the date. October 2016, November 2016. Right now it's January 13th. So if it breaks this line, we're going back to November, okay? It can get bad. If it goes down, we could expect for it to go down $4 or $5. You zoom back out to the, let's say 3-year or the 1 year, you can still see my support line. So this is a pretty strong support line. It holds for the past year, okay? So this looks like a good time to buy Target right now. It could drop some more, but let's go back and see how far it could drop. 3 years. Wow, this is a 3-year support line, guys. So it's either gonna bounce off this line hard or we're heading back to the 50s, okay? We're headed back to the 50s if it breaks this line. Furthermore, I can come back out to the 20 and I can say, wow, if it drops below that, we're really going back to the 60s. So it's either going to go to the 60s or it's going to rebound and head back towards 85. It just depends on a number of factors. How many people are buying and selling it, the news, the economy. Let's go back. Okay, so that's how you do support, resistance, and Fibonacci. Okay, let's talk about volume now. I'm gonna go to the 1 day, 1 minute. Let's remove these drawings. Let's talk about volume. This is my volume box. This is a candlestick. Each candlestick is gonna have volume. Okay, we'll do these two. So when I click this one, you see how the volume is 67,000? It just means that there were 67,000 people in one room buying and selling, or buying calls and buying puts, okay? People were buying calls and puts, 67,000. At the end of the 1 minute, the bulls won. More people bought calls than puts. That's why it's green. Okay? For this 1 minute, more people bought calls than puts. That's why it's green. For this one, there were 17,000 people in the room, but most of them were assuredly selling it or buying puts. You can see these are the same size, guys. This went from 70.32 to 70.28, so 4 cents. This went from 70.16 to 70.20. So they both moved 4 cents, okay? This is a good example. 67,000 people made it move 4 cents here. 17,000 people made it move 4 cents here. So you see how polar it was in each room? They had the same price movement, but the amount of people determined the polarity for that move, okay? So it doesn't matter how many people are in this room. It matters who's purchasing the most of those people. That's what volume is. What's going on in the world? I often skip this lesson. I don't know why. I just started to. But when you buy and sell on any particular day, you can see what other people are buying and selling as well. So this is target. So if I hit trade, delete, let's move that. These are my option chains. To close it, I'm going to hit this arrow. You see how it says today's option statistics? When you open it, this is what happened in the world on Friday. 5,694 call contracts were purchased. 9,981 put contracts were purchased. So these guys are really pushing it down on Friday. Okay. This is the sizzle index. Whichever number is bigger is the number that determined who was winning for that day. So people bought more puts than calls. The sizzle index represents a 5-day trend, guys. So over the last 5 days, since the put number is higher than the call number, more people have been purchasing puts over the last 5 days opposed to calls. Okay, that's what this sizzle represents. Okay. This is called implied volatility. Implied volatility, I like to call turbulence. There's a 23% chance there'll be turbulence in any direction, up or down. Turbulence means a price move, gyrations. So there's a 23% chance it'll be hot or cold tomorrow. We don't know which one, but it's a 23% chance. The higher the implied volatility, the stronger the potential move. Okay? So for Friday, we can see more people purchase puts compared to calls. Also, if you close option statistics, you have something called option times in sales. So if you open this up, you can see the day's biggest and smallest purchase, okay, for both contracts. Today's biggest purchase, or Friday, someone paid $100. Someone paid $31 100 times. This contract expires January 20th, 2017, 72 call. So this person thinks the stock is going to go up this week, and they were willing to put this much money on it. They were willing to put this much money on it. 100 times $31. Someone put $3,100 up, saying it's going to go towards 72 the next 5 days. On the other hand, someone put up $272 279 times, much larger amount, saying it's going to drop below 70. So sometimes you can follow the money and still come out okay. So someone spent $72 279 times. So someone spent 20 grand to say that Target is going to fall below 70 in the next 5 days. I'm going to go with his 20 grand. I would put like 1 or 200 up with that. I like those odds. Plus the implied volatility is kind of strong. Okay, so if you look at the biggest trades of the day, you can see what the big money makers or machines did. Sometimes they can really drive the market and start the momentum. Otherwise, you can filter by price, the option type, quantity, the delta. Here's what the delta means. For every change that the dollar goes up, so if Target is $70, if it goes up to $71, I'll make $33 on this contract. Since the delta is 33, if the stock price goes up for a call up. If this goes up $1, I'm going to make $33. For a put, see it's 68 put. If it goes down to 69.19, I'll make $68. Okay? So for every dollar in that direction, the delta is how much you'll make. So that's what option statistics tell you, and that's what times and sales tell you. Reading the chains. This is all it means to read the change. We did this 3 times already. When you open something, you got the current stock price, you got your calls, you got your puts, you got your days until it expires, you got your strike prices. You can only purchase from the ask column. Okay. If I think it's going to go up, I can purchase the 70.5 strike call for $148. If I think it's going to go down, I can purchase the 70 put for $153. Okay, that's what it means to build the house with the bricks. These are the bricks. To build your house, you click on the brick. Okay. Once you click on the brick, you confirm and send if you want to test the waters first. Right click, analyze trade. Okay, here's the current stock price. If it goes up to 72, you'll make $100 about. If it goes to 69, you'll lose 57. All right, so that's how you read the chains and build your house with the bricks you like. So in this lesson, we covered chart and analysis, context button, support and resistance, volume, what's going on in the world, reading the option chains, and clicking the bricks and analyzing them. So now, does anybody have any questions before we go into fake trading? Okay, let me just take another drink. Okay, lesson 5, putting in work. Are you trading liquid? Here's what that means. If you want to, hold on guys, let me make sure everybody's mic is muted. Okay, so if you want to trade liquid, here's what that means.
Have to drink it a certain way.
It's a little scary.
Yeah, it's frightening. There's so many different ones. There's so many different Scotch whiskeys, and how do I choose? And so it is intimidating.
Okay, so when it says, are you trading liquid? Once you hit the trade tab, you see how the volume is 5,332,594. You see how the volume's that high? Anything above 2 million volume is liquid to me. Okay? So if whatever stock you're trading, if the daily volume is above 2 million, I consider that liquid. To some people, they may not think that's liquid. Some people may say it's 3 million, 4, or 5, maybe 10. 2 is good enough for me. The reason you want it to be above 2 million in volume is because it allows you to buy and sell it relatively quickly. You're not going to be staring at your profit or loss too long. It'll sell and execute quickly. Okay? That's what it means, are you trading liquid? Let's go into fake mode. Fake mode is this button right here. You can only get to fake mode if you log into live trading and navigate to this on-demand button. Let's click that. Okay. I'm going to reset it by clicking this. Reset. Yes. We just have to be patient. Sunday is when TD Ameritrade does most of its account maintenance updates. So Sunday is always when I have most of my issues. We'll see how long it takes though.
So when you're fake trading, you don't have to call in to have them reset it. You could just reset them at yourself.
Yes, when you're trading fake money, You can reset it yourself. The only time you can't reset it is if you fake trade from your phone. If you fake trade from your phone, you have to go to the settings, hit the support button, and then hit general, and then type to the representative, please reset my paper trade balance, enter, and he'll reset it for you.
Okay, thanks.
No problem. Thank you for asking. All right. So it's taking long. What I'm going to do is troubleshoot it. So I'm going to click this. I'm going to try to go to the most recent date, which is January 2017, Friday the 13th. Let's try to go within business hours. 11:41, go. Let's see if it loads the most recent date. Okay. Okay. If it does this too long, I quit and I start it over again. Let me see. All right, so give me a few seconds to pull it up. Okay, let's try this again. So I'm logged in to real mode. I'm gonna try to hit the on demand button again here. Then we're gonna hit okay. Then we're just gonna hope it works. Okay, I'm gonna give it 3 more minutes before I try something else. Well, we went over trading liquid. We went over what you click if you want to buy something after you analyze a stock. I showed you how to analyze and how much you would make if it goes up or down. I'm trying to show you now the routine of buying and selling. That's what I want to show you now. Let's see if it lets us do it. On demand, not available. Not for scanning, it's not. Let's try another date. Go. Well, I apologize for not being able to show you this. what I can show you is that when you do buy it, again, all you do is click ask and then confirm and send and send. To sell it, this is what you do to sell something. So let's leave on demand since it's not helping us.
Now, can you do a call and a put at the same time
Yes.
on the same stock?
In the replay, you'll see me purchase the same thing. About 10 minutes ago, I purchased both, and then I analyzed it.
Oh, okay. I'm sorry.
No, please, you just missed it. That's all.
Oh, okay.
Let me see. So let's go to monitor. Here's how you sell something. When you sell something, okay, let's open Coach. And let's open Twitter. And let's open Marriott or Macy's. Okay. To open, you just hit the arrow. To sell it, you right click, create closing order, sell. Okay. You don't want $42 per contract. We have 4 contracts. You want $44. So you drag it to the right, confirm and send. This is how much they would credit my account. Okay. $163 is what they would credit my account if I sold it right now today. Delete. If I wanted to sell Coach, I would just right click on it, create closing order, sell. You see that I can't sell it for anything? This is why I can't sell it. This is why it says it must have a positive limit price. I can't sell it because it's currently worth $35 per share, but my strike price is $48. Okay? This is not likely to happen. That's why it's so cheap and no one's going to buy it back. So although it's worth $2.50, no one's going to buy it for that price. So I'm probably going to lose the entire investment. And that's what you get if you just leave an investment. You just lose the entire.
Michael,
Mm-hmm.
question in the part where you're gonna sell, right?
Yep.
But you slide all the way to the end. Why would they give you the option of selling it for less money? Yeah, there. Why would they give you the option to sell for less money?
So the reason they have it for less money is this is the natural price that people or exchanges are willing to pay. This is the mid price or the most you can get for it. If I had about 160 contracts and not 4, I could easily dump them for the natural price. I would dump this position easily and fast because I'm willing to pay the natural price of it. However, since I have 4 and I want the most possible, since it's just a puny 4, I can get served relatively quickly. But if I had 160 and I tried to sell it for the most, this thing could be sitting here for at least 20, 30 minutes.
Okay, so it has to do based on the volume of
Yes.
stock they sell.
Yep, because this changes every second. So yes, it's trying to dump the volume for this price at that very second, which could be difficult.
Okay. All right, thank you.
No problem. So that's why you always want to drag it to the right to get the most for your money. However, if you're trying to dump 100, 200, 300 contracts, you probably go here. Or if you really want to give it away, you type in a price lower than this. I don't know why you would ever do that. But if you wanted to get rid of it immediately, you could undercut the natural price, let's say at 0.40, and get rid of it so fast. Every exchange will be begging to pay this price because it's less than what they're going for. Okay? So now, that's how you buy something and that's how you sell it. Stop limits. So in this lesson, we're going to talk about the monitor tab and setting stop limits, setting alerts. Entry is when you purchase it and it takes the emotion out of the bad trade. So let's start with alerts. To set an alert, you have to go to chart. These are alerts. The current stock price for Macy's is $29.88. So watch this. If I want to get an alert, if the price of Macy's goes to let's say $30.15, you right click anywhere, right click. You scroll down, create alert. I want to be alerted when the the current market price is at or above $30.15. Or you could say above or below. I just like at or above because it lets me know it's there and maybe going higher. Either one works, above or at or above, either one. It just means this has to go to 30.16 for it to go here. Okay. If you hit above, it has to go to 30.16 to go off. If you hit at, if it gets here, it'll let you know. I want you to.
Michael, are you able to set it up to buy at a certain point, or is it just to alert you?
Oh, you can set it to buy at a certain point, and I'll show you.
Okay.
Good question. So I'll set this alert, create. There it is. To set the opposite alert, right click, create alert. At or below. Okay, it's currently going for $29.88 right there. If it gets to $29.65, I want to know. At or below, $29.65, create. Okay, you create alerts just so you could go to work or do whatever you're doing, but still keep an eye on it. It'll alert you if it does make that move. Okay, so now she asked, can we automatically buy and sell stuff? Of course you can. So this call contract, this is $29.88. This call contract for the 30 strike is $102. If I don't want to pay $102 for it, say I wanted to pay $98. You see how it says limit? All you have to do is change this to 98. Okay. Confirm and send. Send. All this is going to do is sit inside the monitor tab. So if I hit send, I don't have enough buying power in this account to do it. I should get something cheaper. Groupon. Groupon is really cheap, I think. Yep. Okay, let me try to get something really cheap. $12. If I didn't want to pay $12, but I wanted to pay $7, I'd change this to 7. Confirm and send, send. See how it says buy? When I come to monitor, okay, working orders, you see how it says limit 7? The mark price is $9.50, but I'm only wanting to pay $7 for it. So this will sit here until the order goes down to $7. If the price never goes down to 7, this will live here forever. And I can just cancel it by hitting cancel. If the price does go down to $7, this will execute and I'll own it and you'll see it down here. Okay? So that's how you buy stuff for a price you're only confident with. Cancel. Okay? So now that's alerts. Let me show you guys how to set stop limits. Okay? Okay. Stop limits. This is Macy's. Okay? This has been sitting here for a while. Here's what you do. Right now, I gotta circle this stuff for you guys. I paid $95 4 times. Okay? I spent about $400 on this contract. It's only worth $44.50 4 times. Okay, so I almost lost half the value just about. All right, I paid $95 4 times. It's worth $44.50 4 times. Here's what stop limits do. This is your defined risk. I'm going to right click on it, create closing order, sell. Okay, order type. I'm going to change limit to stop limit. I'm going to change this to good till close or good till cancel. This will stay here forever. Here is the point of stop limits. If you look here again, it's only worth 44.5 cents per contract. If it goes down to $40 per contract, I want this to sell automatically, okay? It's currently going for 42. I have to make it 4 under that. So it's like steps. This is the most I can get. 38 is my stop. So if the stock price goes from 42 to 38 per contract, it'll sell automatically and I'll get my money back here. If it goes down too fast, if it goes from 42 to let's say 30, I have to be able to capture it, okay? So let me explain it. Right now, this is worth 42 natural price. If it goes down to 38, I'm gonna lose $40. I'm gonna lose $4 4 times. Each contract is worth 42. If it goes down to 38 per contract, I'll lose $4, 38, 39, 40, 41, 42. I'll lose $4 4 times. If it goes down too fast, the price will try to capture it between 38 and 30, okay? So your natural price is the biggest, the stop is the medium, the limit is the worst case scenario, okay? Limit is the worst case scenario. So now let's go. Confirm and send. $107 is what I'll get, worst case. Send. Let's clear all this off. So when I come to monitor, we can see the stop limit in action. The mark price is $44.50. If it goes down to 38, and it'll try to stop and sell it to me there. If it falls too fast past the stop, it'll try to capture it between 30 and 38. So mark the most, stop the middle, limit the worst. Okay?
Michael, is there a certain amount that you can set like the worst at? Like if you're your first element is 38, your next one, the base one is 30. Suppose I don't want it to fall that far. Suppose I want like the first one 38 and the next one 36. Like, is that allowed or?
Okay.
Is that allowed?
Sure. So you're
Okay.
wanting to know, let me edit this. She's wanting to know if this is 38, can she make this 36? Like that. So let me see your mic. I still hear some. Okay, she got it. So it's worth 42 right now. The most you can get is 44. That's why it's here. But 42 is what it will sell for right now. 38. So if it goes down 4, it'll sell here. You wouldn't want to put it at 36 because if it drops from 42 to 35, this will stay here and you'll continually lose money. So that's why you want the gap to be at least 5, 10, or 15 cents from this. Because if it goes from 42 to 35, it'll keep going down further and this will be stuck right here. This order can only recognize numbers between these two, not anything beyond it.
Okay, thank you.
Oh, no problem.
I think you have a chat there, open.
So Michael, you want to have those 5 or 10 cents in between to give it time to catch, right?
Yes, just to give it a basket to catch in, yeah. Because if you're wrong, you want the basket to be big enough to catch it. So, yeah.
Thank you.
No problem. So, one thing I like to do when I'm anxious to sell something, so look at this. If I wanted to sell this right now and get my 178, right click, create closing order, sell. If I wanted to sell it right now, drag it to 140, I drag it to 44, confirm and send. After you take off the commissions, I'll have 163 in my account, okay? That's if I wanted to sell it now. When I want to sell it now and I'm impatient, I'll do a stop limit. Okay. Let me delete that again. Let me cancel this stop limit. I'll do a stop limit, right click, create closing order, sell, limit. You change limit to stop limit. Okay. Since it's going for 42, I will put this at 41 and I will put this at 37 or 36. So if it goes down $1, I'll get my money just like I wanted anyway. If not, I'll consider myself lucky because it'll be going up and I could sell it for a profit. Okay. All right. So does anybody have a question about stop limits and how you set them and why you set alerts on the chart? Does anybody have a question about that? We just covered the alerts and stop limits.
Is there anything to stop you, like in the last one that you just did, right?
Mm-hmm.
There's one you did one that said if it drops to 41, then you will sell it there. You stop there,
Mm-hmm.
whatever. But if it goes up really, really far, and then it starts dropping again, do you get to sell it like immediately as it starts dropping, or how do you do that?
Good question. So she's wanting to know, with my stop limit, let me put it back in place, create closing order, sell, limit, stop limit, 38, 30, 32 is safe, confirm and send. She wants to know if this thing shoots up to like 60 and it comes back down, how will I know? That's why these alerts are here. So if this goes up 20 cents and dings off here, I know I can sell it for a nice, healthy profit. I'll get an alert, I'll look at my stop limit, and I'll sell it immediately. So that's why alerts are important, because when the price goes up 5, 10, 15 cents, you'll look back at your order, you'll sell it, or you'll right click, replace it, and you'll update your stop limits to match whatever these numbers are. So that's why alerts are important. I hope that answers your question a little.
Yeah, I think it does. I think.
All right. So that's taking the emotion out of it with stop limits. Entry is based on analysis. It means, when do you buy? I showed you how to set alerts just to track your progress with your stop limits. And this is all happening on the monitor tab, which is this one. Okay. I'm going to right click and cancel now. Now let's talk about lesson 7, looking for the skill. Scanning, volume, fake trades during the live trading day and when the market is closed. Before I go into lesson 7, let me explain what this means. If you want to trade real stock prices with fake money, you log into paper trading. So I'm going to say that again. If you're awake between 9:30 a.m. Eastern and 4 p.m. Eastern, and you want to trade real stock prices with fake money, you have to log into paper trading, which is orange. If you want to trade fake money when the stock market is closed and have the ability to fast forward and rewind time, you have to come into real trading and then hit on demand.
I am. I'm going to go to bed. I'm waiting for you to go back to bed because you like to keep getting up.
Huh? Me? Okay.
Mike, some questions in the chat.
I can't see the chat because of my screen. Let me see. Okay, that's why it's lighting up. All right, let me see. Everyone, are you saying 15 cents as in dollars or? Okay. Maze is closing a tons of stores. Is it too late to buy any puts, or have they fallen in price enough? So Tamika, at 9:15, you asked me, is it too late to buy puts for Macy's? It's never too late. I think Macy's will continue to drop, at least for another week or two, but it's all based on analysis. So if you do buy puts, make sure you have your stop limits on so you aren't too exposed if it doesn't go your way. Are you saying 15 cents is in dollars, like 15, or just cents? When you see 0.15, it is 15 cents. No problem, Tamika. When you see 0.15, that is 15 cents. But you have to multiply it by 100 to get $15. So it's both. It's red is 15 cents, but it's actually $15, Ms. Raza. All right. So when I see this blank, it means I have to click that box. Okay. Now, so I hope you
Can
guys.
you go over that fake trading thing, the fake trades and the on-demand thing or whatever? Can you go over that again, please?
Sure. So if it's between the hours of 9:30 a.m. Eastern and 4 p.m. Eastern, if you want to trade live stock with fake money, you have to log into paper trading. So when you first open your application, it'll ask you live trading or simulated, or also known as paper. So if it's during the day and you want to use fake money, paper trade. If the stock market is closed and you want to fast forward and rewind with fake money, you log into real mode like this, real-time data, and hit on demand. On demand, you can fast forward and rewind. That's how I like to practice, because you can immediately see if you are right or wrong. Okay, let's talk about how to scan. To scan, you hit scan. Okay, I'm going to clear it out, so it's nothing here. I'm going to show you how to scan based on two simple things. You want the ask price of the stock. If you're trading with less than $200, guys, you need to be trading stocks priced from $7 to at least $30. So if you have less than $200, you need to be trading stocks that price. The volume, you hit the drop down. The volume needs to be at least 2 million. 2 million. When you click this box, 100 million will populate by itself. You hit scan. We want to see stocks, show 2,000, scan. Yes. Okay. These are all stocks priced between $7 and $30 that are liquid. So these are affordable stocks that you can trust that you can buy and sell relatively quickly. Okay. So here's Fitbit. Here's BlackBerry. Here's Sprint, I think. Yeah, S is Sprint. What other ones do I recognize down here? This is Ford. This is Pandora. What else do we have down here? This is my beloved Twitter, UBS. If you don't know what these companies mean, all you have to do is take the symbol MFC. I don't know what MFC is, so MFC. I come to analyze. I hit fundamentals. Once I hit fundamentals, I type in MFC. Okay, here it is. You just scroll down. MFC, enter. It didn't tell me what it is, which is weird. Let me try another one. CHK. Let me try another one just to make sure. Analyze, fundamentals, CHK. Chesapeake Energy Corp. It'll tell you what the company is, where it's at. It'll tell you what the big guys are doing. Most of the people are holding them. You can see the volume. You can see the price. Do not sleep on these cheap stocks, okay? I lost a lot of money. I lost the opportunity to make a lot of money because look what happened. This stock went from $6 to $30. Let me show you. The last 10 days. This stock went from $6 to $30. I sold it Monday. I felt so ashamed of myself. That's why you have to be patient. I bought about $500 of this when it was $6. I sold it because I was impatient. Next thing you know, I'm hanging out with some friends and it shoots up to $33 and I felt so sick inside. Okay? I lost out on thousands of dollars. So don't sleep on these high volume, low cost stocks. This is how you scan for affordable stocks. However, if you want to do something with, if you want to make money quicker, you have to go with more expensive stocks, priced between 50 and let's say 150.
How long did you have that stock, Michael, before you sold it?
You're making me ashamed to tell you, 6 days. 6 days. I was a week impatient for no reason. I analyzed it. It was oversold, meaning its lowest point. I purchased it because it fell below the -1 deviation we talked about. Purchased a boatload of it. Got too impatient. It skyrocketed. I literally could have had a down payment for a Benz. Sucks. 50 and 150 scan. Yes. Okay. These are more expensive stocks that move a little bit quicker. You got Nike, you got Verizon, you got LVS, which is Las Vegas Sands Corp. All the casinos is right there. Microsoft, AIG, Target. So all these companies are companies you know about. These aren't weird companies. That's why the volume is at least 2 million, because people don't think they're weird. Okay? So that's how you scan and use the volume to scan and the price. If you have $500+ in your account, you want to be between 50 and 150. Because look, this stock, TIF, is 81.92. Watch this. TIF. 81.92. Because the stock is 81.92, the options are going to cost me between $200 and $300 because it's 81. But if I go with a cheaper stock, we said 6 to 30, scan. If I go with a cheaper stock, like, what's this one? 598 HL. If I type in HL, it's $5, but look at the options, 36.18. So the cheaper the stock, the cheaper the options contract. So I can rent 100 shares of this for $36, and that'll last a month. I'm controlling 100 shares of a highly liquid stock for 1 month for only $36. So if you got less than 200, you need to be playing around between 6 and 30. If you got more than 5, you need to do 50 and 100. Now let's go to lesson 8. I basically show you how to set up your phone. I'll show you that right now. When you set up your phone, you want to look for this button and make sure you have these menus selected. Okay? So you can just pause the video here when you watch the replay, but you want these menus, these 5 menus, to be on your phone so everything looks the same. Now let me show you guys something really complex. TD Ameritrade has something called studies, okay? Studies. When you hit edit studies, I'm sorry, cancel. Studies, add study. So the basic studies I use for my personal trading is the daily moving average. So moving average, daily moving average. Okay, I'm going to put that on there, daily moving average. When you see this line, this is the moving average now. The 28 and the 14 day. Let me make sure it's correct. Daily moving average, you hit the gear button. Okay, you see 28 and 14. No, I'm sorry, this is the 28-day average. The displace is how far it is from the current line. Zero displace, let's just say 28-day moving average, okay? apply, okay. So this purple line is the 28-day moving average. If you hit studies again, add a new study, you add moving averages, daily moving average, okay. You see the second line? You go back to studies, edit studies, you see the second one? You make the displace, you hit the settings, you make the displace 0, and then you make the length 50 days. So you got a 28-day moving average, and now you want a 50-day moving average. So you got a short and long term. You hit apply, okay. I want the color to be different. So if you hit studies, edit study, settings on the 50, color, yellow, okay, apply, okay. So the short-term moving average is the purple. It represents 28 days. You can see that at the top. The long-term moving average is yellow, the 50-day. So when you change your context, you can look for the golden cross, guys. See this golden cross right here? Draw. You see this golden cross? When the short term, which is the purple is 28 days short term, long term is 50 days. When the purple went through the long term, that's called the golden cross. Look how the stock price popped. Okay, it went from here to here. So that's a golden cross. That's called the daily moving average. If you rewind, you can see how I put these lines here. The next type of thing I use is Bollinger Bands. So if you go to studies, add study, okay? Mic is on. Okay, Bollinger Bands. So if you go to studies, add study, momentum studies, let me see, all studies B, all studies B, Bollinger Bands, okay? When you hit that, you hit okay. You hit studies, edit studies. It's looking confusing because we have these lines on top of each other. So I'll remove the daily moving averages and I'll just keep the Bollinger Bands. I'll hit apply and okay. So when I zoom in, this is all it is. This is the dotted line in the middle. This is the standard deviation line +1. This is the standard deviation -1. You see it started poking out of the +1. That means it's overbought and you saw it spike down, okay? It went down about 30 cents once it popped above the standard deviation line, okay? Let me clear that. The purpose of the studies, guys, since this study is the Bollinger Bands, you can actually save it. You can go to studies, save study set. I'll call it Bollinger Bands. Save. So now when you remove all the studies, you can go to like Target and you can hit study, load, Bollinger Bands, and you can automatically see if it's oversold or overbought. So just watch the replay and rewind it, and that's how you save studies. I'm gonna create a new study. Okay, I saved that study set, so let's remove it now. Studies, add studies, moving averages. We're gonna put the 20 and the 50-day moving average back. Okay, that's one. Studies, add study, moving averages, DMA. So now that I have both, I can click it again and edit them. This is the 28, so I'll hit settings, make sure the displace is 0. Okay, this one, hit settings, make sure the displace is 0, and you set it to 50 days. Boom. Okay, apply, okay. So this is my short term and long term. I got to edit it one more time. I want to make the long term 50 study yellow. Color yellow, okay, apply, okay. To save this, save study set, call it 20 and 50 day and moving average, save. So you guys see how I can switch study sets now? I can put the 20-day moving average lines up. I can put the Bollinger bands up. I'm gonna remove them all now. Okay, I got two more to show you guys. MACD. The MACD is a moving average convergence divergence. It shows the heartbeat of a trend. So to add that, add study, it's an oscillator. I think they have that here. Momentum. MACD is a momentum. Also, or oscillator, they call them one or the other. MACD. Okay, so once I hold on, guys. Once I click MACD, okay, I'm gonna hit studies, edit. This is the MACD. It takes the 12-day minus it, subtracts it from the 26 and uses the non-exponential. If you YouTube the MACD, it'll make much more sense what I just said. I'll hit apply and okay. So here's the heartbeat, guys. Right here, you see the stock was declining right here. Like it really started to get heavy right here. This is when it really started falling. That's why right here, you see the volume pick up for the red. You see how it picked up? Right here when it was heavy is when it fell heavy. You see how it started to get light around in here? It started to stop a little bit. That's what this shows you. Let me show you one that has more of a pulse to it. I'll show you Apple. Okay, let's go to the 10-day. Okay. So let's look right here. Right here, you see the stock really picked up. It turned green really heavy. That's because right here, the stock went up. It turned green really heavy. Right here, you saw the heartbeat start to change and come down and turn red. Right here, you can see the heartbeat come down and turn red. So if I was a betting man, I would probably say it looks like it's going to turn green again, Apple. It looks like it's ready to come back this way. Okay, so you'll probably see green appear right here. So the MACD is a heartbeat. To save it, studies, save study set, we call it the MACD. Save. We have one more to show you. The relative strength index, also known as RSI. So let me clear the studies, remove, yes. Study, add study, all. It's called RSI or relative strength index. Okay. Relative strength index or RSI. You hit that. No, that's not the right one. Sorry, guys. Studies, add study, all. This will kill you. I don't know why it keeps doing that. Relative strength index, RSI, there it is. I found it. It's right here. Oh, this is annoying. This is so annoying. This is so annoying. Stop. Just stop. RSI. Okay, this is called the relative strength index. Let me show you what that means. It's just like Bollinger Bands. This yellow line, if it goes above the yellow line, too many people bought it. If it falls below the yellow line, too many people sold it. Okay? It doesn't always mean that though, because you see right here it went down, the strength went down, but the stock kind of stayed leveled. So the relative strength index kind of helps sometimes, but sometimes it may not. It's just a signal. Let me try a different stock for you. Let me try Nike. Okay, perfect example. This is when it does work. You see how it's red right here? Because it goes above the yellow line. It means too many people bought it. Too many people bought it right here. Then it came down. Then it came down. So the relative strength index does show you the trends and the overall stock itself. Okay? That's called the relative strength index. And that's what I like to use in addition to my normal signals. So now that I want to save it, studies, save study set, RSI, save. So here's the beauty of saving your studies, guys. Anytime you want to see different signals, you just hit this button and you can load them. I can load the 20-day and 50-day. I can load the Bollinger Bands. I can load the MACD. I can load the relative strength index. And I made my 2 custom ones here. Okay? And that's lesson 8. So, let me take a deep breath. Does anybody have any questions about any lesson?
So when you have your thing on the more focus, what I know it's your personal thing, but what does that mean? You go more focused on a certain stock?
So when I hit studies more focused, more focused, it's, look at the daily moving average. It's the 28-day trend and the 50-day trend. Then it has the MACD at the bottom. Okay, that's the heartbeat. So all it's showing on more focused is the Bollinger Bands, the 28-day and the 50-day, and the MACD. That's more focused. When I come into on the go, it shows me a shorter term. I see the 8-day and the 16-day moving average. I see the Bollinger Bands, and I see the MACD at the bottom. So on the go is short term, more focused is long term in terms of the daily moving averages. That's my point.
Okay. All right, thanks.
Remove all studies. Anybody have any questions?
Michael, I have a question about on the phone. When you're trying to set up those columns like you said do.
Yes.
Where do you go to do that? Is that Tinker
What type of phone do you have?
Android?
So if you have an Android, what you want to do is hit the menu button and select Account Overview. When you select Account Overview, you'll see all of your menus, watch list, balances, and top positions. When you click top positions, you'll see a gear symbol next to where it says symbol. When you click that, that's when you want to select the following. PL day, net liquid, PL open, mark, trade price, and any others that you may want to use.
Okay.
Okay. If you have an iPhone, it's the same thing. Wow, guys, this was 2 hours and 20 minutes.
So you don't want to hit the margin on the Android phone, do you?
Margin, no, you don't want to hit margin.
Okay.
Only because you aren't borrowing money from anybody with the type of account you have.
All right.
Okay. So let me just read the entire syllabus just to make sure we didn't forget anything or leave anybody out. We covered what stock and options are, risk, defined and undefined, the two type of contracts, calls and puts, the first down, which is actually strike price, the price you think the stock is going to be or go toward, the expiration date, that's when the contract expires, in the money and out of the money, what they mean with regards to a call and a put. I told you about being a bull or a bear. I explained the difference in percentage, also known as return on investment, ROI. Are you moving average? I explained the short and the long-term moving averages. The boxes, which is basically account info. That's how much your account is worth, how much you have in value to spend on stocks. I showed you how to read the news. I showed you how to read the watch list. I showed you how to monitor your investment based on what you paid for it and what it's worth. I showed you how to trade based on how you felt and your analysis. I showed you how to analyze. I showed you how to analyze. I showed you the charts. Okay, there it is again. The context button, which is here, showed you that. I drew the support and resistance. I explained the volume. I explained how to see what everyone in the world is purchasing, how to purchase calls and puts based on in the money and out of the money. That's what the bricks are. Liquid is anything above 2 million in volume. You know what to click if you want to buy or sell. It always has to be the ask column. You always have to ask the price to buy it. I showed you how to analyze if the stock goes up or down. Someone asked me, can you buy calls and puts? You just click one, right click, analyze. If it looks funky, you go to risk profile. Then you go back to trade. You close this by hitting the button with the arrow. You buy a put by clicking a put. You right click under link. You analyze. Now, if you look at the bottom of my screen, you see I have a call and a put at the same time. If you want to see what happens, look at the stock. If it goes up, you see the purple. If it goes down, you see the purple. So that's how you buy call and put. I just need you guys to practice buying and selling. To buy something, I just showed you. You click the price. You click the price. You hit confirm and send. When you actually own something, you'll see it right here. To sell it, let me see. To sell it, all you have to do is right click on the contract, create closing order, sell. You don't want $42. You'd much rather have 44. Confirm and send. Okay. Lesson 6, I showed you the monitor tab, which is this. This is where you analyze your contract. I showed you how to set alerts. I showed you what an entry is. That's when you buy it. You take a motion using stop loss. I showed you how to scan. If you are trading with less than $200, scan for stocks priced between $6 and $30 that are liquid, 2 million volume. If anything over 200, make sure the stocks are priced between 50 and 100. Anywhere.
I have a question. Can you do the scan again? Show me where that button is again.
Of course. So you hit spotlight, scan. If it's nothing here or something here, you want to start fresh. So you scroll to the right, you click these X's. It's no box here now. Add filter 1, add filter 2. If you're trading with less than 100 or 200, the minimum a stock should be is $6. The max it should be is 30. The minimum volume should be 2 million. The max 100 million. Or that's You can make it 100 million. 100. There it is. Scan. Yes. 6 and 30. Okay. Volume. I'm sorry. Volume is between 2 million and 100 million. Scan. Yes. So that's how you scan for stocks that you can afford under 200.
Okay. Thank you.
No problem. If it's over, you go from 50 to 100. Scan. Yes. Okay. Volume. I showed you guys volume and explained that. I showed you the difference between fake trading and live trading and how to set up your phone. So after you complete this program, what you should look into is candlestick patterns. Once you grasp this program, you should be able to look into candlestick pattern based books and learn what the different candle setups mean. Okay.
Like, question. I noticed that from looking at from the iPad to the computer to the phone, the programs are they're a little different. Is it just better to just when you're starting out to just use your computer first until you get used to buying and selling and hitting your buttons and whatever you need necessary to make your trades?
Yes, sir. Good question. When you first start, for like the first month, I recommend doing everything on the computer because you want to get used to what everything means in the columns. Once you learn that, it's easier to go to any device because you'll only be looking for those particular columns to give you the basic information you need. So I would wait until you practice more or at least study the columns so you know what to look at no matter what device you're on. On the iPad, they like to have fun with the layout, so you got to be very patient in how you learn it. Let me see.
Thank you.
Yes, sir. Yes, sir. All right. So if no one has questions, I am going to save this now to 7:30, 8:30, 9:30, 2.5 hour presentation. I'm going to save it and send you guys the link. It may not be until like 12 o'clock tonight because this thing has to buffer and load up to the YouTube channel. But I'm sending you guys this tonight so you can study. If you still have questions, please make an appointment with me for next Saturday and Sunday and the following one after. So let me stop recording.